On behalf of the KCB Group Board of Directors, I am pleased to welcome you to our 2022 half-year results announcement. I want to acknowledge the support that we have continued to receive from our stakeholders, particularly our customers, our shareholders, our staff, and our various regulators. I appreciate the work that is being done by our group leadership led by Paul Russo in ensuring that the business continues to deliver superior shareholder value. Paul came to office, as you all know, at the end of May, and we've had an extremely successful transition, and we're on a path to lead the bank now in a different direction. Looking at our focus on scaling our regional play, we continue to leverage on our international businesses to provide customer reach around the region while contributing to economic growth. We are also happy to have made very good progress in ambitions to expand into the Democratic Republic of the Congo. Earlier this month, we announced and also entered into a definitive agreement with the Trust Merchant Bank shareholders to acquire a majority stake in the DRC-based lender, and we expect this transaction to close by the end of this quarter, subject to regulatory, shareholder, and other requisite approvals. In April this year, we completed the integration of our two businesses in Rwanda after the acquisition of Bank Popular de Rwanda, which is now called BPR. BPR Bank Rwanda has increased our scale and improved our operating leverage for sustainable growth in the long term. May I just add that we're now the second largest bank in the Republic of Rwanda. Under our sustainability agenda, we remain steadfast in our commitment to sustainable business practices and social impact programs in the realization that business is no longer just about profits, but transforming the communities where we operate. Looking forward, we remain optimistic about the East African economy's inherent medium and long-term potential. Our priority is to harness investment and consumption drivers to accelerate the pace of recovery and growth. I believe that we are finally in the right path.
So I'll take you through now the numbers. We had a robust growth in our balance sheet, 18% growth year on year to close the balance sheet's total assets at 1.2 trillion. Loans had a fairly good performance, 123 billion growth, equivalent to 20%. Key drivers of that growth coming out of KCB Bank Kenya contributed about 71 billion of that. BPR being incorporated into the financials, they've delivered about 33, and our brothers NBK delivered about 13 billion of that growth. Deposits, you can see also grew almost the same as loans, so it's an area that we need to keep our focus on, delivering about 123 billion as well, 16% growth. Our target was a lot higher than that, but it's something we're definitely working to deliver. Looking at the other side of the balance sheet, our deposit proposition, fairly good growth in deposits as I talked about, 16%. Still slightly behind what we expected in terms of target, but nonetheless double-digit growth. The split of deposits between corporate and retail sitting at 53 and 47. Split between currencies, the bulk of our deposits in local currency at 81%. From a capital position, happy to report that we still have fairly good buffers, both at core capital and at total capital. When I split that by individual, this is aggregated by individual entities. NBK is the only subsidiary where at total capital we still have a slight non-compliance in terms of hitting the capital adequacy ratio. We are confident that by the end of the year, NBK should be compliant across. Provisions, year-on-year change has actually gone the other way. So when you compare our provisions of last year versus our provisions of this year, we've had a 34% decline. The reason is, from an IFRS point of view, what has been downgraded this year was already sitting in stage 3 in prior years. So we had already taken the impact of moving them to stage 3. So from a financial term, we had already downgraded those facilities. So that's what answers that question.
We want to be the very best in customer experience, driving a digital future. And that is anchored on 4 strategic thrusts: customer first, with leading value proposition. And we are looking, because of the organization that we are, with the history that we have, in driving efficiency. But most importantly, using digital, we want to reduce the customer efforts to serve, or the pain that a customer will go to get service from us. We are ambitious to commercialize the various technologies that we've deployed, and we therefore want to raise our NFI contribution or share of contribution to 33%. And we are trying to be bold. This is looking to regional businesses, scale that up. We've moved from a 5% contribution. We are ambitious to cross the 20% line. We've deepened digital channels penetration, and you can see year-on-year change. Mobile lending stepping up 105%. Mobile service up 28%, and merchant POS is up 33%. And a dip in ATMs, which just means we are starting to get into the right space of getting customers to serve themselves where they are. And a very impressive growth in internet banking at 74%. And that's a space that has not happened for us in a while. What is impressive to point out is VUM alone is up 34% year on year, with an average ticket of 21,327 shillings. That is a successful story. 611 billion in terms of value gone through internet banking. So it's not just a percentage, the quantum is showing. And therefore, if we keep on that track, particularly for not only just our high net worth or SMEs, but also for our corporate banking, it is starting to face the right direction. So it's how do you convert the success story about the numbers into now value and access on credit. So the top has started delivering. Now we need to convert that to what you're seeing below there in terms of uptake on credit and channeling credit to that part. It's easier to convert when people are in. So we have to bring people through the door, and now we have to give them solutions. So second half is going to demonstrate